Welcome back to Liberty and Finance. This is something we haven't done before. This is a quick market update for this week. Today is Thursday, December 10th, 2020. We have Andy Schectman, the CEO of Miles Franklin Precious Metals, with us just for this quick update. Andy, thanks for coming back on.
Good to see you again, Dunagun. Nice to be here, and thanks for having me back.
If we could get a few minutes from you, you watch the retail precious metals markets, you watch a lot of things, the COMEX, etc., all the time. If you could give our viewers a quick update on what the dynamics are that you're seeing right now in the markets, help them be aware and prepared for what's coming.
I guess to me the biggest thing to keep in mind here is the disconnection between the paper price on sell-offs and what that looks like on the retail side. We have had virtually no selling whatsoever through all of the correction. Pushing the price down below the moving averages, the big drive-by shootings, the drop that happens at 6 in the morning. All of these massive waterfall drops have absolutely no bearing at all on what's happening in the physical market. In fact, quite to the contrary. People listening to you and other people out there that are talking about the real fundamentals look at these pullbacks as subsidies. And I guess what we're seeing is strength in the physical market that is completely independent of the price action that we're seeing in the erroneous price action on COMEX. In fact, as the price falls, physical demand in this industry seems to accentuate. And I think people need to understand that price is the ultimate tool of misdirection. Whether we're talking about trying to keep people from pulling metal off of the exchange. They have many tools of doing that, whether it be offering a cash premium above the settlement price or knocking the price down, trying to shake people from the trees. The bottom line is simply this. The price is a tool of misdirection until the fundamentals, which seem to be increasing every day in favor of this, change. So I'd like to start the conversation in that light, simply saying ignore price, focus on mathematics, on economics, and sprinkle a little bit of logic on top of there. And I think it's easy to see that these price pullbacks really represent a subsidy to me more than anything else. And I don't think people should be discouraged. I'm often amused by how emotional people who own precious metals truly are. We are not buying gold and silver to become wealthy. We are buying them to preserve and protect our purchasing power. And if you take a step back and look at what's happening on a broad scale to the equity markets, to the fixed income markets, and to our dollar, it's becoming quite obvious that this will play out the way that we think. I will say one last thing, Dunagun, before I answer your questions, and that is that every single investment direction or declaration that we've made over the years, and we've been doing this for a long time, since 1990, just about every one of them's come true. Never when we thought, never how we thought, often much, much longer time frame than we would have ever expected. This is a very high stakes game, and the people pulling the strings all the way up to the top of the Bank of International Settlements are doing all they can to keep the majority of the people off the trail. And so if I could give one piece of advice at the outset of this conversation, it is that use the pullbacks as an opportunity to cost average or to accumulate at a subsidized level in any bull market. The key to success is to buy the dips, not chase the rallies. So that's where we are right now in a sea of volatility, in a fight between those that don't want us to accumulate it and those that are accumulating it on the cheap. And I think a year from now, we'll look back at these prices and be thankful we did.
Yeah, I was in a live chat during a premiere of a video on my channel this week, and it occurred to me that as people are concerned about, gee, can I get the very lowest price, or maybe I'll wait till it actually breaks through, until I actually see some momentum before I make my move. And I reminded people, when that happens, I cannot sell you a time machine to bring you back to now when the action was more boring and things seemed relatively unexciting over a period of a couple of months in terms of price action. When it gets exciting, you'll wish for the boring days, and I can't, at any price, I can't give you a time machine to bring you back to now so that you can make your move now.
Look, it's easy for us to say it, but the truth of the matter is that buying when the rhetoric and the price action is in a negative light is never easy. You have to have strong fingertips and be able to hang on. You have to have strong conviction and trust your gut. I think that, it's really important to not get caught up in the news of the day, of the moment. The vaccine is here. We're all saved. Don't worry about everything else. The rhetoric that we are seeing is always of the moment. They often say one of the reasons that maybe we're at a disadvantage to the Chinese is that we think in terms of days and weeks, months on the outset, and the Chinese think in terms of decades. And you can see that by the way they are accumulating assets, by the way that they are accumulating all of the world's commodities, whether they're buying gold and silver, they're buying oil or oil reserves, they're buying corporations. They are using their money to buy real assets, and they are using the prices of no consequence to them. So I think that's really what we need to focus on here is the big picture. And when you talk about buying insurance or buying anything for that matter, we should be happy when it's on sale, especially if the fundamentals favor it moving much higher, because there will come a time when it runs away from us. Especially when we're talking about silver. I'm in particular, I talk about silver because silver might be the only commodity that comes to my mind, or really one of the only assets that's going to have a battle. We will see a battle take place between the industrials and the people looking for value hunting in terms of investors. Think about it. What other asset can you buy at half of its 1980 value? What other asset can you buy that the largest commercial bank in the world paid a $980 million fine for manipulating the market to accumulate almost 1 billion ounces of it in a nefarious fashion? And when you take a look at silver, you see an investment, or an asset rather, that is highly industrial. It is blanketed on either side, copper on one side and gold on the other, copper being the main industrial asset and gold being an investment asset, and silver right in between. And there will come a time, I believe, when, look, this year alone, we're expecting a 350 million ounce shortfall in silver from what is mined and what is consumed. And if Biden does take hold of the presidency, and you see him implement his Green New Deal on top of the drive to go to battery-powered automobiles, on top of a digital world where silver is more and more and more important, and we are having to dig further only to come up 350 million ounces short when we only mine 800 million ounces a year. It's a game of musical chairs. The assets are depleting. The needs are ever increasing. And I think that when you look at silver, at some point, the industrials will wake up and say, my gosh, well, look, we only need $4 worth of silver to make an iPhone. But if it's running away from us and it's getting impossible to get, we got to get it and get it in big supply. And so you'll see companies like Apple and Samsung and Tesla and all of these corporations that need silver to produce their product. They'll buy it at any cost. And when that happens, you will see an awakening by the always too late investment crowd, who will run to capitalize on one of the only asset classes that is not overvalued. In comparison to stocks and bonds and real estate, you're looking at an asset class that is trading at half of its all-time high, with fundamentals that are screaming. And take a look at what's happening on COMEX. Massive amounts of metal being pulled off the exchange by the people in the know, the wealthiest people in the world, the sovereign wealth funds and the family offices and the billionaires. They're pulling the metal out of harm's way at a time when people are fixated on price. Look at what the big money is doing. The JP Morgans of the world, the central banks of the world, repatriating all their metal from the Bank of England and the New York Fed. And look at what's happening on the COMEX. Look at this as an opportunity to do what the big money is doing, not what the rhetoric is or the price is saying. Because when that day happens, when that day comes, the awakening that, hey, the industrials need to secure this at any cost, and the price starts to run, will be in direct competition with the investment side. And that's when you see a supercharge, a market that really explodes. And that's when you see the people who are projecting $100, $200 silver becoming a reality. And it's no more outlandish, Dunagun, than saying Dow Jones will go to 10,000 when it was 2,100 in 1990, the first conference I ever went to. A guy said that and was laughed off the stage. I watched the Dow Jones go from 2,100 to 30,000 from 1990 till today. And conversely, the Japanese Nikkei go from nearly 40,000 to, at its low, 10 or 12,000, and it might be a little higher than that now, 15, 18,000, 20, wherever it is, I'm not sure. But point of it is that markets will always go higher than people think possible, and they'll always fall further than people think possible on the other side. And I think people will realize that very quickly in the thinly traded yet ever increasingly important silver market. And it represents maybe the best value on the investment side of the table on the planet. It's just too good to be true. And people get discouraged when the price comes down. Don't be. Look at it as an opportunity to do what the big money is doing, and a subsidy at that.
Two things I wanted to follow up on that you touched on. One was you mentioned don't get upset if you buy something and then it goes on sale. Rick Rule is famous, has a quote about that. I think it was in your father, David Schectman's newsletter that came out this week, talking about Rick Rule's quote that if you believed in something enough to buy it at a certain price, and then it became available at a lower price, the same thing, same value, but at a lower price, you should be delighted and do all you can to try find if there's some way you can buy more.
Absolutely. Well, the problem is people don't look under the hood enough. For most people, they just look at the price, and they don't really dig underneath to support the decision with fundamentals. And so they're ultimately motivated and moved by the price action. And that's why I always say it's the ultimate tool of misdirection. If you want to misdirect someone with an investment or with an asset class, simply mess with the price, and you will misdirect everyone, giving the manipulators, if they're large enough, the ability to pickpocket the physicals while everyone else is running and looking for a different asset class. And that's exactly what's happening. It's kind of like when you play poker. If you ever played a game of poker and there's one or two players with massive chip stacks, they can push the table around. And that's what's happened with the big money. They were able to direct rhetoric, and they're able to direct price to fit their agenda. But look at what's happening behind the scenes. The repatriation of metal, the pulling it off the exchange, the reclassification, all of the things we've talked about are behind the scenes. And people say, well, why isn't the price behaving? It will. It will behave. It's up considerably since the beginning of the year. And you know, I think that if it were to move up too fast, it would be self-defeating. This is not what we want to see. We don't want to see a price of gold and silver go to the moon. That's going to have a lot of implications that are negative with it. If you believe things are going to get challenging moving forward, then as often as you can, accumulate on the pullbacks, because quite frankly, I don't see one shred of evidence that tells me that we are seeing a reversal of anything. Like Rick also says, you know, you'll know when that happens when you see interest rates above the level of inflation. We're so far away from that, it's funny. So, you know, when you look at a 10-year treasury right now, that is paying roughly a third of what the inflation rate is, it's a sucker's game. And at the same time, you have a positively correlated stock market to the bond market, which is something we really don't ever see. And so as interest rates ultimately rise, and they will, it'll be a day of reckoning, not only for the stock and the bond market, but also the trifecta, the real estate market. And might be the first time in history that all three of these asset classes are positively correlated together, negatively correlated to interest rates. And so we look at gold and silver as not only insurance or a hedge or as a inversely correlated asset class to all these things. I look at it as wealth, pure wealth. I don't look at gold and silver in the light of getting wealthy. I look at it as wealth and as money. In a world where our currency is being debased right underneath us rapidly, go to the grocery store and tell me otherwise. I think you'll find that gold and silver will do their job, and they will safeguard your purchasing power and your wealth, regardless of how this all plays out. But it will not be easy, and it's going to test your resolve. You need to have strong fingertips. You need to hang on. You need to trust your gut. And I think that if you do, not only will it be more rewarding when you realize you were right, but you'll be one of the very few people who isn't or is out of, at least partially, out of harm's way. Because quite frankly, we are the exception to the rule. And again, you and I and the people who listen to this show represent but the pimple on the elephant. The elephant's in big trouble, and it's being pushed in a direction that will end up, I think, with a lot of heartache and a lot of tears. Those people who have bought gold and silver not to get wealthy, but to preserve what they've worked hard to obtain. Because remember, gold and silver have outlived every market crash, every hyperinflation, every Great Depression, every pandemic, and still have immutable wealth and value associated with them. So I don't get discouraged when the price pulls back like we've seen. In fact, if anything, I look at it as an opportunity to continue doing what we're doing and get real value for our paper currency that seems to be losing it a little bit precipitously.
Two things I wanted to join in with what you just said. In this whole discussion, you talked about you haven't seen a lot of selling that justifies any of the downward price action. I would confirm that on my phone when it rings from clients calling, they're calling to accumulate on those days. And that some of those, I know I'm going to hear from them. And when the phone rings, I know exactly who that's going to be because I'll get a call from that client on down days. The other thing you talked about, though, was price separation between the paper price and the physical. We certainly saw that in a big way in March. What are we seeing now? Is this a calm enough time that there is an opportunity on down days for people to actually not have that entire gap of the move down filled with increased premium, but instead be able to get a lower price on physical?
I will say I'm a little bit surprised by it. I thought the premiums would still be higher. They are higher than they have been over the last, dozen years, but they are markedly lower than they were at the beginning of this year. Look, premium is a function of supply and demand. And while there still is very strong demand in this industry, it's not the panic that we saw earlier in the year. I think you'll arguably see that type of environment again. This is somewhat of I don't even know how to explain it. The demand is really pretty steady, but somehow the premiums haven't exploded yet. And I do believe they will. It's really a darn good entry point. As an example, we have $20 gold pieces right now, St. Gaudens $20 gold pieces that I can sell, that we can sell for maybe $20 more than a gold eagle in Mint State 62 grade. Last I checked, they were $1,965 a coin. I know that APMEX had them $120 higher than that. We have amazing values on certain things. The Silver Call of the Wild program, that products that we have on special, is another. There are real great values out there on some items. Some items are still kind of expensive. Silver Eagles are still expensive compared to where they were. They're twice where they were over the last, my whole career in terms of premium. But half of where they were, or less than half of where they were in March. So look, the bottom line is this. I expect when I look at what comes down the road, I see a mainstream public that continues to look for places to safeguard their wealth. And I see a continuing encroachment into mainstream ideology by this industry, and more people. I was on the phone right before we got on this call with the financial advisory out of California. I see more and more people waking up to the benefits right now of gold and silver. And as Rick Rule, a common theme, often says, 0.5% is the allocation to the matrix of investments across this industry, across this country. In other words, everyone in the country put together, if you look at their portfolios, 0.5% of what they have is put into precious metals. That's nothing, with an average or the mean over the last 30 years being 2.5%. And he's very famous for saying, he expects it, I expect it. If all we do is regress to the mean, or to that 2.5% that we've seen over the last 30 years as an average allocation to a portfolio, that's a 5-fold increase. You will see those premiums go to the moon at that point. At this point, for whatever reason, there's still good supply. And I'm surprised by it, to be honest with you. I thought we would see a continuing escalation of premium. This is something that you and I have talked about. I loaded up on product in a very big way, some of which I paid higher premiums than it's being sold for right now. That's just the name of the game. That's the way that it goes. I can't hedge that premium. And so I understand when people bought it at higher premiums and look at the lower premiums right now and feel, geez, I paid too much. Well, so did I for my product, but in the end, I don't care. I have a business that needs to have product, just like people are buying product to protect themselves from what's coming. In the end, we won't care what you paid, but in the end, it's number of ounces that you own. And so, although it's really a difficult question to answer, I would simply say this. I believe we will see higher premiums. I still believe the market will define itself by an inability to readily and easily source product. And I think these pullbacks truly, honestly, are a subsidy because when it dries up, like I've seen many, many times in environments that are nothing like we see today, it's gone. And you can't get anything. It doesn't matter how much money you have. It's gone. And so I would say that product supply, premiums, availability, they're all really good right now. But like that, they can change, Dunagun. And I've seen it many times, and I'll stick by my belief that we will see it again.
We wanted to make sure before we let you go to have a sneak peek from you at the Miles Franklin Weekly Special. You mentioned the Canadian Royal Mint Call of the Wild Wildlife Series. I understand that that's mixed year coins because there was different animals issued in different years. There's at least 7 or 8 that are, I believe, still available. Can you tell everybody what that special is about?
They're my favorite bullion coins I've ever sold. In fact, these were put away, so to speak, and we've held them for a very long time. They are, number one, the purest silver coins in the world at 4.9 fine, just like the regular maple leaf. But the Call of the Wild silver coins are limited mintage. They only made 1 million of each. They have massive collector appeal. And we have several of them. I'm not sure which ones we have at the moment. The Falcon.
I've got the list because I was just a fellow tonight wanted some of each, and in fact, one of the styles, the Hawk, actually sold out today. What we still have left is the Bison, the Cougar, the Bald Eagle, the Falcon, the Grizzly, the Moose, the Owl, and Perth Spiders. Oh, actually, he bought out the rest of the Moose, so there's no Moose left. Bison, Cougar, Bald Eagle, Falcon, Grizzly, Owl, 1.5 ounce Grizzly, and Spiders.
Yeah, the Perth Mint Spider was an attempt by the Perth Mint to do the same thing that the RCM was doing. If you go around and price shop these around the country, you'll see wickedly high prices. We're selling them at $3.59 over spot until they're gone. And I will tell you that they are the best gold and silver coins I've ever sold. The Call of the Wild gold coins are the only 5.9 gold coins in the world. And the demand for this stuff is insatiable throughout the industry. And there's an affinity in Asia for purity and animal likeness. So a lot of these coins made their way over to Asia and will never come back to North America again. All of the silver coins had a strict mintage of 1 million, just like I believe the Perth Mint funnel web spider did. They're impossible to get. Once they're made and sold, the mold is broken and you can't find them anymore. It's as good of a special as I've offered this entire year, and I expect them to disappear pretty quickly. If you're looking to buy silver that has a free call on numismatic premium, I mean, they're cheaper than silver eagles right now. Most of the companies who have them will be selling them for many, many, many dollars higher than what we are offering them for. It's as good of a buy as you will ever find. And if we have the good fortune of doing these brief updates weekly, I will bring a special to you and your listeners every single week in an attempt to offer your listeners the best price in the industry for whatever product that we're able to put on special, something special and unique every single week. And this, to me, truly is as unique as it gets. Do a little price shopping, you'll see what I'm talking about.
Well, Andy, we're grateful for your presence here, and we've got tons more questions that we're going to save for. We're going to do a question and answer look ahead into 2021 next week with you. We'll do another market update. Thank you for this market update. We've been speaking with Andy Schectman, the CEO of Miles Franklin Precious Metals. Andy, thanks for joining us.
Dunagun, have a great weekend. Thanks for having me. I'll look forward to catching up with you on Friday.
Sounds good.
Thank you.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today. To acquire gold and silver, just go to libertyandfinance.com. When the main site comes up, click on Bullion Sales. That's libertyandfinance.com, Bullion Sales. You'll see my name, Dunagun Kaiser, my phone number, and my associate, Kaiser Johnson, his phone number, our email, libertyandfinance@protonmail.com.